How's everybody doing? So a little context before we get started here. We are actually one short today because our moderator ran into some visa issues, unfortunately. So we're going to be winging it a bit. I did try improv once, got booed off the stage, so that is my disclaimer. Upstage, I guess first I'll intro myself. I'm Sean. I lead crypto research at Fundstrat. We are a research shop in New York. We offer macro, technical, portfolio strategy, as well as digital assets research. We serve over 200 institutional clients in nearly 30 countries, and we also serve over 5,000 high net worth and IRA clients through our retail subscription platform. Do you want to go?
Thank you for having me.
Next up is Anastasia.
I'm Anastasia, product manager at Kaiko. So Kaiko basically is a market data company in the blockchain space. We build data and infrastructure at an industrial level for institutionals and enterprises. Yeah.
Hey guys, my name is Bobby. I'm the co-founder and COO at CoinGecko. So what we do is we track crypto. We track crypto data, mainly price, volume, market cap, and so on. We've been around since 2014, and basically we track over 13,000 cryptocurrencies on CoinGecko.
Hello everyone, my name is Alex. I'm the CEO and co-founder of Nansen. Nansen is a blockchain analytics platform. A lot of degens like to use Nansen to discover new opportunities within the NFT space and DeFi space, to perform due diligence on those opportunities, and to set smart alerts so they get notifications when important events happen. Happy to be back in sunny Barcelona.
All right, so I don't know if you guys know this, but it was a bit of a struggle getting up to the stage because Alex and Bobby are both, I guess they're celebs around here. People were stopping to take photos, and I didn't think we were going to get up here. So I am humbled to be in their presence right now. With that, let's start with Bobby. Maybe the title of this panel is Finding Signal in Blockchain Data. Perhaps you could give us a lay of the land in terms of how you use blockchain data on the day-to-day and how you see the ecosystem evolving.
I prepared some notes. I mean, it's kind of a weird panel. Our moderator didn't show up, but I have some notes. I think one of the things that I was preparing before the talk today was kind of like when it comes to like exploring the signal in blockchain data, I think it's worth considering that there are many different kinds of data in the space. So I've listed down a few data. I mean, I think that the hard part about data is that there's so much data available in this space. Is how do we make sense of the data and find the alpha in it? So I think some of the things that I have over here is some sort of data like centralized exchange, pricing, volume, order book data. You can kind of glean some insights if you look deep into them. Perpetual funding rate, options data, decentralized exchanges have so much data as well. I think it's interesting to track some of the buys and sells on some of these places, real-time trackers such as Gecko Terminal, for example. I mean, on-chain analytics goes without saying. Who are the smart money? Alex can talk more about them. What are they buying? What sort of contracts are they interacting? I always like to look at TVL data. Are they sort of increasing or decreasing? Do you see money flowing into Avalanche, for example, or money flowing out? Bridges are interesting, obviously. Number of token holders are interesting. I always like to look at things like how distributed a particular token is. Is it mostly held by insiders, or it's kind of very broadly distributed? So you see that projects that have sales, for example, have very heavy distribution to insiders, to team and the DAO, for example, whereas team that have fair launches are usually very well distributed. So yeah, these are some of the things. Obviously, market cap and fully diluted valuation is a key data that we track at CoinGecko and something that we use, or at least I use personally, to kind of decide whether to buy in or not. What I notice is some coins have very low market cap, but when you look at a fully diluted valuation basis, it becomes really high and doesn't really make much sense. I think Sean will know that more as well from that. So yeah, I mean, I've got a list of things here, but I thought like maybe Anastasia will say some of the thoughts as well.
So yeah, with CoinGecko, we actually have the same basis. You talked about centralized exchanges data. It's really like historically at Kaiko, we have been collecting data from hundreds of centralized exchanges. And but today, since like a year now, we're collecting data from decentralized exchanges, and that's what we call blockchain market data at Kaiko. And yeah, that's what I'm working on actually. And so in terms of why we wanted really to get this data on chain is that first we observed a huge increase in volume traded on those new exchanges. First because like all those new exchanges are present on different chains, which enriches the ecosystem, but also because we've seen demand from either liquidity providers, either institutionals and enterprises that wanted to discover and onboard in this ecosystem through those markets, but didn't have the market data, the blockchain market data to do so. So yeah, this is how Kaiko at least decided to go into the blockchain market data space. So yeah, maybe like the so us, we see the data from the market's perspective, but I've actually used Nansen's offer, and I know that you have a little bit of a difference. So you see the data from the user's perspective. You provide products from the wallet's perspective. So maybe Alex, you can tell us more about that.
Yeah, happy to. I think one of the interesting things about blockchains is that you get this transparency that you don't have in traditional finance. And with on-chain data, you get the chance to understand in real time what the smart money is doing, actually with what any address is doing. The thing that we've specialized in at Nansen is to basically label addresses so that you can understand a bit more about the context of what addresses do, who they are, what their behavioral traits are, and so on. So we have thousands of addresses that we have labeled as smart money. And a lot of people ask us, you know, what does it take to be smart money? And I've had lunch with some people who asked me why their address was labeled a smart money address. But effectively, these are addresses that have successfully yield farmed, they have successfully flipped NFTs, and they've been able to make money. And this is pretty cool because it levels the playing field to a large extent. You can understand and learn from what these addresses are doing on chain. So this is something that we think is quite interesting, and it's unique to blockchains if you think about it. Right now we have more than 100 million addresses labeled on Nansen for different blockchains. And I'm also happy to announce that Avalanche is the best labeled blockchain we have at Nansen now, which is great. That's great. Applause to the team who managed to pull that off. We started off with Ethereum, of course. That was where we started. And we've been able to take the approach of nailing it first and then scaling it later. And so it's only a few weeks that Avalanche actually surpassed Ethereum when it comes to tagging and understanding the ecosystem of Avalanche on Nansen. So I would say if you want to understand what's happening on the blockchain, Nansen is a very good place to go and find out which DeFi protocols are used, which NFT collections are being traded, which NFT marketplaces are used, and so on and so forth.
I can speak for myself here when I say Nansen is a very usable and great platform, top to bottom. Great job playing to the home crowd as well. That was a good touch. So as an analyst, I think I come at this on-chain data from a slightly nuanced perspective. Whereas a lot of my colleagues up here are in the business of manipulating, collecting, and articulating data through their respective platforms. I am kind of in the business of creating fundamental models and frameworks within which we can value and articulate, somewhat of a fundamental analysis to an institutional investor. And Alex mentioned that blockchain data is remarkably unique because it's open, global, anybody can read it. that aspect is unique, but if you double click on a lot of the attributes that we look at on chain, a lot of them mirror the same concepts that we see in accounting. In fact, I actually think that 10 years from now, what's going to develop is actually just a very consumable new accounting system where we have fees being paid to miners on the network. We can drill down into segment that that revenue between, say, ERC 721 revenue, ERC 20, et cetera, and really gain a good understanding of what's going on chain and build a quasi P&L. Similarly, you can derive balance sheets from fund flows. If there's capital from certain investors flowing into an ecosystem, you can ascertain that that ecosystem is a bit more well capitalized than others. So from my perspective, a lot of this is I'm in a unique position because I sit between crypto and Wall Street, and a lot of my job is actually just translating these concepts into a digestible format and a well-known format. And so that's kind of where I'm coming at when it comes to finding signal in blockchain data.
I actually wanted to jump on what you said about the public nature of the data, of the blockchain data. Actually, it's something that Kaiko has looked at like for the past year when we began investigating on how to get this decentralized exchanges and lending and borrowing protocols data. It has been very, very hard. There is a complexity layer that we don't know it exists when we just look at blockchain data, but at least from Kaiko's side, we discovered that every protocol is extremely different, and to get a final standardized product, you need to connect to like every protocol and know every specificity, and this was the hard part. Like getting public data, it's kind of easy. There is an infrastructure cost on doing like big data based on blockchains, but when it comes to building products and analytics based on those sources, it becomes hard.
Yeah, absolutely, and I think that's why I wanted to remove myself from the actual the data aggregation layer, because the job that these folks are doing is remarkably difficult and very different from a data science perspective, and what they're actually doing to manipulate and label this data. And without their work, I wouldn't be able to do what I do. Same with a lot of on-chain analysts. And so, yeah, I just want to obviously acknowledge the difference there between the level of technical difficulty up on the stage.
Might be interesting to hear from your point of view, Sean, as well. I mean, you see the intersection between Wall Street and crypto. Do you see a lot of how much of traditional macro data goes into like your fund when it comes to making decisions, for example, or it's very driven by crypto data? Does macro data play a role, for example? Yeah,
no, that's a great question. And again, I'm in a unique scenario where I'm surrounded by our firm was started by Tom Lee. He's an equity research analyst legend and a macro king, and I can just siphon off a lot of his knowledge and help to enable my insights as it pertains to the crypto ecosystem and a lot of the major crypto assets. But to answer your question, any asset trades with some percent of fundamental value and some percent of speculative value. I think what we're seeing right now, and the big reason we've seen correlations around 1 between, say, Bitcoin, ETH, and a lot of macro risk assets, is because there's not a lot of fundamental value being considered right now by these macro hedge funds that are putting these assets in their portfolio. Right now, it is a lot of just, categorizing as a risk asset and buying and selling when you need to increase or reduce risk. Over time, I think, these fundamental frameworks are going to garner much more attention, and we'll actually see, overperformance, underperformance between, say, a smart contract platform sector. Right now, we're not there yet. But I think what a lot of these fundamental valuation frameworks help with using on-chain data is to articulate where the risks are and to explain certain price movements. You know, I think a lot of the value add is kind of on the supply side, because for the first time we have, you know, this granular insight into this, I would call it a quasi cap table, right? So you could actually ascertain at what price certain funds bought into this cap table, so to speak, and it kind of can lend credence as to whether there's more or less risk of you know, increased sell-off. So yeah, I hope that answers your question.
I'm kind of curious to hear a bit from CoinGecko what it's been like to get information from exchanges, because there's kind of it's a slightly different paradigm than getting, you know, on-chain data where you are getting the data directly from the horse's mouth. But with exchanges, we know that there are challenges with regards to wash trading, fake volume, and so on. So I'm curious to hear how you guys have tackled that challenge.
Yeah, I think the crypto space has kind of changed very significantly over the years. In the original days back in 2013 and so on, trading was only done on centralized exchanges. So CoinGecko was built from the ground up to mainly support centralized exchange trading. I think that the narrative sort of shifted sometime in the year 2020, where like DEX started picking up volume, and I think now it's kind of 50-50. In fact, probably I would say DEX is probably driving some of the volume compared to volume and price compared to centralized exchanges. But yeah, basically, I think when it comes to exchanges data, there are basically two kinds of data. Like they provide, most exchanges provide either a REST API, which is a snapshot data every minute, or kind of a WebSocket data, which is like you query every single trade that comes in from the exchange, which is actually quite similar in nature to the on-chain data, I would say. So CoinGecko was kind of built mainly using the REST API data, so you get snapshot data to get the price and volume to kind of get the state of the market at a particular point in time. And then what we do is sort of volume weighted average price to kind of get the average price of crypto, which is okay in a traditional market, but in crypto, volume weighted average price is not really good in the sense that it's skewed because of, let's just say, mostly Chinese exchanges that have been known to do a lot of wash trading, and they inflate their volume aggressively, and that obviously skews the price at some point. That's one of the main issues. So one of the things that we did was we kind of introduced we call it trust score in CoinGecko, where we, instead of just looking at a volume and a price, we kind of incorporate a few of the measures to kind of have a sense of which exchanges are kind of doing real volume or which are doing fake volume, for example. So we started looking at the order book data for an exchange to kind of get the 2%, how much volume is there for the 2% range. Started looking at the similar traffic to kind of get a sense if the exchange reporting super high volume but has barely any traffic, they most likely are faking their volume. And looking at the, yeah, these are the two main things that we kind of look at to kind of also look at cybersecurity and so on to kind of get a sense of how good an exchange is, for example.
I think this is kind of interesting in the context of finding signal in data, because many times people might assume that it's just a matter of reporting whatever data you get, but there's actually a lot of processing that you have to do. I mean, you have to account for wash trading. We also have to do this with NFT trading, for example. Many of you might be familiar with LuxRare, an OpenSea contender, where effectively you had incentivized wash trading. And so you have to look at what can we classify as wash trading of NFTs purely to get Lux tokens, and then we have to clean that out as well in our data, right?
It's also worth, this happens even in Texas as well, right? If you think about it, like all sorts of liquidity mining are a sort of incentivized trading activity. Or so if you look at TVL data, TVL is super high because like all this TVL is incentivized, and then everybody starts reporting the revenue from a protocol is super high, for example, on an annualized basis, but really like maybe 80% of this revenue is caused by incentivized TVL. So how do you extract all those things to really track what's the real use case? That's the challenge, I would say.
Yeah, exactly. It's very hard sometimes to decide what data should you include and what should you not. I think one report I would recommend that people check out is the Bitwise report that they did on wash trading of centralized exchanges. They did some very, very cool data analysis to look at the distribution of order books and things like what Bobby was mentioning. It's a really good report.
Alex, how have you, on that note, how have you worked through some of those challenges internally?
Yeah, so with NFT trading, we mostly created some heuristics. I think one of the guys in the team is here in the audience who worked on this. But to look at if you're sending NFTs back and forth with the same addresses, and that's something that you can filter out and say clearly this is just being done to inflate the volumes and to harvest Lux tokens, for example. We haven't been doing it so much with DEX trades with regards to incentivized trading that you might do there. And similarly, if you're looking at TVL or yield farming, I mean, almost all of that stuff is incentivized. So it's hard to really distinguish, what is organic volume versus incentivized volume. But with NFTs, that's the main approach that we've taken.
Very great. And are you seeing more traction? I don't know to what extent you wanted to discuss your client base. Are you seeing more traction from clients as it pertains to NFTs?
Oh yeah, we launched our NFT features at Nansen. So initially we were a very DeFi-oriented analytics platform. We were fortunate to launch shortly before DeFi summer in 2020, which was great for many DeFi yield farmers and also for us. The year after, we launched NFT dashboards almost as a fun side project, but it quickly became the most used section of Nansen. And so when I go to conferences and sometimes people come up to me to say they're fans of Nansen, typically it's because they've been flipping NFTs and made a lot of money off of it.
It's funny, actually, if you think about it, like the NFT bull came by in 2021, pretty much caught almost a lot of people by surprise. Maybe not the core NFT guys, but I think NFTs, the growth of NFTs in 2021 has been pretty surprising for many of us, I would say.
Yeah, and I think from the data perspective, they also bring with them new challenges, right? Because you have to then start looking at assets that are obviously not fungible, as the name suggests. So you have to look at specific items within the collection. You have to look at pricing in a completely different way, because you have to now look at floor price, you have to look at max price in the collection. We have a price estimator on Nansen for specific NFTs. So if you have, Bored Ape number 69 or 420, you could look that up and get the price estimate for that specific NFT, and it's powered by a machine learning model, which has been trained on all the history of transactions, as well as the traits data for NFTs. So it brings with it lots of new, interesting challenges when it comes to data as well.
Just a question for Alex. Except for floor price, do you think there is another metric that better expresses the value of collections, not just specific NFTs, but the collection itself?
Yeah, that's a good question. We have an NFT index that we have launched. It's called the NSN NFT 500. So it's a bit like S&P 500, and it covers about 85% of the NFT market right now. But within these collections, there are different things you can look at. I think floor price is the one that most people look at. Traded volume is another thing that you would probably look at. And then, of course, things like what Bobby was saying earlier, the number of holders is quite important, because it gives a sense of how distributed the community is. And this is one thing that you could see quite early with Bored Apes, for example. They were able to get a very wide distribution of their tokens, except for some whales, like Dingaling, who owns more than 100 Bored Apes. But yeah, so there are a few metrics you can look at there. I normally would look at to what degree they're sort of distributed or decentralized across the collection.
I think when it comes to NFT, the main metric that people kind of look at is the NFT floor price. I think is a metric that people start to look to see kind of how much is kind of at least worth. And then the other thing that is interesting for NFTs is that the rarities, right? How rare are particular NFTs are. Then you put on a premium on top of the floor price. The problem with floor price data is that, I don't know, 90+% of all NFTs are traded on OpenSea, and this floor price data is kind of like a data that is only available on OpenSea. It's not publicly available data. So you got to query the OpenSea API and get this data, and most of the time you get rate limited pretty quickly on the OpenSea API. I think Alex, you'll know some of these challenges as well.
Yeah, that's right. Also, I think you have to look at the liquidity as well, right? Because liquidity is a unique challenge for NFTs, and it's also why many, I think, market makers in crypto aren't very active with NFTs yet. It's a completely different challenge to solve. It's, I think, more analogous to something like art dealing or even real estate investing, right? So yeah, I think liquidity is probably another one that you have to look at.
Awesome. Well, I got in the corner of my eye, I see this clock. It's starting to tick down. So we're going to be shoot off shortly. How about we just go through and perhaps just tell everyone where people can follow you, and maybe we'll sign off from there.
Yeah, I'll start first. So yeah, you can follow me at Bobby Ong on Twitter, and obviously follow at CoinGecko on Twitter as well.
You can follow me on Twitter and on LinkedIn, and you can discover all of our products on our website.
I am on Twitter at Sean M. Farrell. That is the preferred venue. Thank you.
You can go to Nansen.ai to do a trial with Nansen for a week. You can also find us at Nansen_AI on Twitter, and myself at Svanevik. Thanks very much.
Thank you.